Hey there, folks. Imagine a world without insurance. Scary, right? You could lose everything in a fire, a crash, or even a rogue squirrel attack. Back in the day, people relied on their communities for help during tough times. It was like a giant informal safety net. But as you can imagine, this system wasn't exactly foolproof. What if your whole village was wiped out by a flood, or, a plague of locusts? That's where insurance came in, like a superhero in a finely printed contract.
Insurance basically said, hey, let's all chip in a little bit of money regularly. That way, if something bad happens to one of us, we can use that money to help them get back on their feet. Genius, right? This idea of spreading risk really took off. Fast forward to today, and we've got insurance for almost everything: cars, houses, phones, even our beloved pets. But how do these insurance companies actually make money? Stick around because we're diving into that right after the break. All right, let's talk business. Insurance companies are businesses after all. They're not charities, no matter how much their heartwarming commercials might make you think otherwise. Their main goal? To make a profit. They do this by collecting more money from their customers, that's us. Then they pay out in claims. Sounds simple, right? Well, it's a bit more complicated than that. To understand how it all works, let's break down two common types of insurance: car insurance and home insurance.
Imagine this, you're cruising down the road singing along to your favorite tune when, bam, some reckless driver rear-ends you. Your car's a mess and you might even have a few new aches and pains. That's where car insurance swoops in to save the day, or at least your bank account. You pay a monthly or yearly fee, called a premium, to your insurance company. In exchange, they agree to cover the costs associated with an accident, like repairs to your car or medical bills if you're injured.
Section 5. Accidents happen, that's where car insurance comes in. Now, not everyone gets into accidents, thankfully. But when they do, the financial impact can be significant. That's where car insurance steps in to provide a safety net. So, what happens to all those premiums paid by safe drivers? You might wonder if it's fair that they pay for something they may never use. Well, the insurance company uses that money to pay for the claims of those who do have accidents. This system ensures that everyone is protected, even if only a few need to make a claim. They also use it to cover their operating costs, like salaries, office supplies, and those catchy jingles in their commercials. These expenses are necessary to keep the company running smoothly and to provide good customer service. And yes, whatever's left over is their profit. This profit is essential for the company to grow, invest in better services, and ensure they can cover future claims. It's a balancing act, really. The insurance company needs to charge enough in premiums to cover potential claims and make a profit, but not so much that they scare away customers. They must find the right balance to stay competitive and reliable. The insurance company needs to charge enough in premiums to cover potential claims and make a profit, but not so much that they scare away customers. This delicate balance ensures that they can provide coverage to those in need while maintaining a sustainable business model. So the next time you pay your car insurance premium, remember that you're contributing to a system that helps protect everyone on the road. It's a collective effort to ensure safety and financial security for all drivers. Understanding how car insurance works can help you make informed decisions about your coverage. It's not just about protecting your vehicle, it's about safeguarding your financial future. In summary, car insurance is a crucial part of our financial ecosystem. It provides peace of mind, knowing that if an accident happens, you're not alone. The premiums you pay contribute to a larger pool that supports everyone, ensuring that help is available when it's needed most. So drive safely and rest easy knowing that car insurance has got your back. It's more than just a policy. It's a promise of support and security.
Section 6. Now, let's move on to home insurance. Home insurance works in a similar way to other types of insurance you might be familiar with, such as car insurance or health insurance. You pay your premium, and in return, the insurance company agrees to cover certain damages to your home and belongings. This agreement is detailed in your policy, which outlines what is and isn't covered. This could be anything from a fire or a natural disaster to theft or vandalism. For instance, if a fire breaks out and damages your kitchen, or if a storm causes a tree to fall on your roof, your home insurance policy can help cover the costs of repairs. Think of it as a safety net for your most valuable asset. Your home is likely one of the biggest investments you'll ever make, and home insurance helps protect that investment. Just like with car insurance, the insurance company uses the premiums collected from all its policyholders to pay for the claims of those who experience a covered loss. This pooling of resources allows the insurance company to manage risk and provide financial support when it's needed most. They also factor in things like the location of your home. Is it in a flood zone, earthquake territory, the age and condition of your property, and even your credit score? These factors help determine your premium and the level of risk the insurance company is taking on by insuring your home. Additionally, there are ways you can potentially lower your premium. Installing security systems, smoke detectors, and even living in a gated community can sometimes reduce your insurance costs. It's also important to regularly review your policy and update it as needed. Life changes, such as home renovations or acquiring valuable items, can affect your coverage needs. In the unfortunate event that you need to file a claim, the process typically involves documenting the damage, contacting your insurance company, and working with an adjuster to assess the loss. The adjuster will evaluate the extent of the damage and determine the amount of compensation you're entitled to based on your policy. Once everything is processed, you'll receive the funds to repair or replace your damaged property, helping you get back to normal as quickly as possible. Home insurance provides peace of mind, knowing that you have a financial safety net in place to protect your home and belongings. It's an essential part of homeownership, ensuring that you're prepared for the unexpected.
Section 7. What does home insurance actually cover? Now, it's important to remember that insurance isn't a free pass to be reckless. Insurance is there to protect you from unforeseen events, but it comes with its own set of rules and limitations. Both car and home insurance policies come with specific terms and conditions. These terms and conditions are crucial because they define the scope of your coverage. They outline what's covered, what's not covered, and how much the insurance company will pay out in the event of a claim. For instance, your home insurance might cover damages from fire, theft, and certain natural disasters like hurricanes or tornadoes. For example, your car insurance might not cover damages if you were driving under the influence of alcohol. This is a common exclusion because driving under the influence is considered reckless behavior. And your home insurance might not cover flood damage if you live in a high-risk area and didn't purchase additional flood insurance. Flood insurance is often a separate policy because of the high risk and potential for significant damage. It's always crucial to read the fine print. The fine print contains all the details about what is and isn't covered, as well as any exclusions or limitations. For example, some policies might not cover damage caused by mold or termites, which can be a significant issue in certain areas. Talking to your insurance agent can also help clarify any questions you might have. They can explain the specifics of your policy and help you understand what additional coverage you might need based on your location and lifestyle. Additionally, some insurance companies offer discounts for taking preventive measures, such as installing a home security system or smoke detectors. These measures can reduce the risk of damage or loss, making you a lower risk to insure. Regularly reviewing your insurance policy is also a good practice. Life changes, and so do your insurance needs. Whether you've renovated your home, acquired valuable possessions, or moved to a new area, updating your policy ensures you have the right coverage. In the event that you do need to file a claim, knowing your policy inside and out can make the process smoother and less stressful. Being prepared and informed is the best way to ensure you're adequately protected. Ultimately, home insurance is about peace of mind. It's about knowing that if something unexpected happens, you have a safety net to help you recover and rebuild. So, take the time to understand your policy and make sure it fits your needs. Section 8. Insurance companies love premiums. So, we've covered the basics of how insurance companies make money. They collect premiums from policyholders, use some of that money to pay for claims, and keep the rest as profit. But there's another trick up their sleeve: investments. Insurance companies don't just sit on a giant pile of cash waiting for claims to roll in. They invest that money in various assets like stocks, bonds, and real estate to generate even more income. It's like a bonus round for them. Section 9, but wait, there's more. Now, you might be thinking, this all sounds pretty straightforward. What's the catch? Well, the insurance industry is notoriously complex. There are tons of different types of insurance, each with its own set of rules and regulations. and insurance companies are constantly finding new ways to assess risk and calculate premiums. They use sophisticated algorithms and data analysis to determine how likely you are to file a claim and adjust your premiums accordingly. It's all very scientific and, some might say, a little bit creepy.
Section 10, Insurance and Pregnancy. Speaking of creepy, have you ever wondered why some businesses ask women if they plan on getting pregnant in their first year of work? It seems like a personal question, right? Well, it turns out that health insurance costs are a major expense for businesses, especially for small businesses. And pregnancy and childbirth can be expensive medical events. Now, I'm not saying it's right or fair, but it's something to think about.
Section 11. Keep those brains buzzing. That's all the time we have for today, folks. We've explored the fascinating world of insurance, from its humble beginnings to its complex present. We've learned how insurance companies make money, and we've even scratched the surface of some of the ethical dilemmas surrounding the industry. But the conversation doesn't end here. Keep those brains buzzing and stay curious.